Welcome back to Explain the Charts. Today, we're taking a deep dive into XAUUSD, the gold-US dollar exchange rate, and analyzing the news and the chart data. With gold having a somewhat bearish sentiment over the past week, we'll look for key levels to potentially short. Looking at the news and analysis, it seems like investors are weighing the potential for a rate hike or at least a pause by the Federal Reserve, driven by strong economic data and a recovery in equities. This uncertainty about the Fed's stance on interest rates is a significant factor impacting gold's price. Also, the tech sector's losses have weighed on major stock indexes, which could be pushing investors towards the safety of gold. Let's begin our analysis with the daily chart of XAUUSD, focusing on the overall trend. Over the past 6 months, XAUUSD has been on an upward trend, breaking through multiple resistance levels. However, in recent weeks, the price has faced significant downward pressure. This downward pressure is evident in the red candles, which indicate a decline in price. We can clearly see the bearish sentiment, with the price declining for 5 consecutive days, with each day closing below the previous day's open. This is a strong indication of a bearish trend. And this bearish sentiment is further supported by the recent economic data. The US dollar index has seen a significant rise over the past week, fueled by short covering, which can lead to a weaker gold price. Also, recent Fed speak has offered little in the way of new insights about future monetary policy, further contributing to the bearish sentiment. Looking at the key price levels, we can see that the 20-day SMA is providing dynamic support around $2,620. However, technical indicators suggest a neutral to bearish stance, with a potential for a steeper decline if the price breaks below $2,624.50. So, if we see the price dip below $2,624.50, it's a strong indicator that a steeper bearish trend could be starting. Now let's zoom in on the 1-hour chart of XAUUSD and take a closer look at the recent price action. On the 1-hour chart, we can see a series of red candles, indicating a decline in price. The price has been consolidating around $2,630, but it's clear that the momentum is shifting. The bearish momentum is further supported by the recent breakout of the descending triangle pattern on the 4-hour chart. Zooming in, we can see that the price has broken through the $2,630 level, a key resistance level. This is a further indication that the bearish sentiment is gaining strength, and the price could be headed for lower lows. Looking at the 15-minute chart, we see that the price has broken through the $2,620 level, indicating a possible continuation of the downward trend. However, it's important to remember that the market is constantly evolving, and unexpected events can significantly impact gold's price. Therefore, it's crucial to monitor the news and economic data closely and adjust your trading strategy accordingly. To summarize our key price levels, if we see the price break below $2,624.50 on the daily chart, it would be a strong indicator that a steeper bearish trend could be starting. And on the 1-hour chart, we're watching the $2,600 level, which could be a potential support level. In conclusion, the recent news and technical analysis suggests that XAUUSD is facing downward pressure and could be headed for lower lows. This bearish sentiment is driven by a number of factors, including the possibility of a rate hike or pause by the Federal Reserve, a stronger US dollar, and a decline in equities. However, it's important to monitor the news and economic data closely and adjust your trading strategy accordingly. If the price breaks below the key support levels, it would reinforce the bearish sentiment and suggest a further decline. But if the price rallies and breaks through the key resistance levels, it could be a sign of a bullish reversal. Keep an eye on these key levels and watch for any significant news events that could impact the market. Thank you for joining us on Explain the Charts, and happy trading!